trading session. You should be seeing my charts. Got the S&P 500 up there on the screen. See if we are streaming. Okay, we are good to go. Ross nearly had his silver at 64,000. Yeah, I bought it at 65. Cup. If you look at silver, I actually bought some this night here at 65. I just about nailed the low, which is pure luck. We'll see if that holds or not. But as you all know, I had an alert set here to buy more silver if it hit 70. I did so. I was in the middle of dinner. By the time I got to the desk, I was at 66. By the time I placed the orders at 65. I didn't buy enough, just added another 100 ounces to my position. But still going to be a nice little pull here, depending on how things worked out. Silver trading at a premium. In fact, some of the highest premiums I've ever seen due to record demand. So a lot of these dealers have 14, 15, 18% markups on silver. But nonetheless, I still think it's going to be a winning proposition long term when it comes to physical metals. All right, so let's take a look at the overall market. Now, silver, obviously one of the big ones, had a huge parabolic move December and January. Margin rate increase, shocked things down, kind of cycling out here. This is just what we need to see. I mean, it's possible we just soar from here, but typically when you get a big move like this, you want to see some level of consolidation. You want to see some absorption of that supply in the market, okay? So you got obviously massive amounts of sellers driving this from 120 to 75 in a single day. So you want to just shake that out, get the supply out of the way, bore people out, scare them out, and then, set up for the next run higher. That's typically what we see in these commodities, especially your precious metals, is they tend to run in stages like this. So you'll get, a nice acceleration for a couple of months, a consolidation, a big move, a consolidation, a move, a consolidation, right? This is natural, healthy price action. It's what you want to see, because if it goes too far, too fast, then you get these big dips. So we want to see some consolidation here. This might have got a little extended, but it's going to come down and hopefully just sort of shell out in here, absorb, and then get ready to continue the run higher. So still very, very bullish on gold and silver into 2026 and 2027. We look at the stock market. Bounced back really nicely on Friday and setting up here around the close. So markets looked like a lot of weakness in the last couple of weeks, came ripping back, now sitting within about 1.5% of all-time highs. In fact, the Dow Jones made new highs on Friday, and the NASDAQ being the laggard here, which is still well off. So what this is telling us, if anyone's focused on where do I focus on, what kind of stocks should I be buying, well, let the market tell you. And there are three indexes, right? The S&P 500, that's just the largest 500 stocks by market cap. So NVIDIA, Microsoft, it's tech weighted just because of the biggest companies are tech, but it's 500 largest. The big tech heavy index is the NASDAQ. That one showing the weakest. So big tech stocks, especially given the AI theme we've been in for the last couple of years, actually beginning to roll over. So that's telling you, hey, tech is no longer the leader, at least not right now. And then for the first time in quite a while, the Dow Jones is showing the most strength. The Dow Jones Industrial Index. So when we're seeing the salt-to-the-earth industrial-type companies make new highs, while the big mega-cap tech names are still 4, 5, 6% off the highs, that's very telling. It tells us a lot about where the leadership is in the market, where institutional dollars are flowing, and where we should be focused. Now, listen, the AI trade was great. We made a bundle on NVIDIA and Supermicro Computer and the quantum stocks and all the AI-focused names, but those runs don't last forever. You get 2, 3, 4 years, heads up, the good is priced in, right? Valuations will continue to rise until they reach a level that's just unsustainable. And so look at what these big names have been doing. NVIDIA's decently off. Microsoft, well off. The stock market is 1% of all-time highs, and Microsoft is a good 15-20% off its highs. Apple doing fine, but Amazon decently off its highs after a nasty earnings. It's down about, 20% from the highs. AMD, it's kind of holding up all right. Google, still holding up near highs. So you can see the leadership is definitely shifting. But, not like Microsoft was a sure thing bet for the last 3 years, and that's no longer the case. And we found this when the earnings came out last week, and it wasn't that they missed on sales. It wasn't that they missed on revenue. It was that they're spending so much damn money on AI and they don't have anything to show for it. And investors get frustrated. Wall Street grows impatient. They say, look, okay, you tell us you're going to spend $100 billion a quarter in CapEx. It's going to do all this. Sales are going to soar. The AI models are going to boom. It's going to change the world. Okay, we'll value you according to that. But when you show up every quarter, say, well, it's taking longer than we expected. Well, it's costing a lot more than we thought. You know that OpenAI thing? We're not sure it's going to pan out quite as strongly as we hoped. And Wall Street is going to punish them in a great deal for that because they've already priced in that success. Today's stock price, or yesterday's stock price, I should say, already reflected the earnings, the profits from this stuff we were expecting they told us we'd get. So that's why these stocks can make such nasty corrections, is they've priced in absolute perfection. If they do average, they're going to fall 20 or 30%. They do poorly, they're going to fall 50 to 80. All right? So always important to keep abreast of where the leadership is in the market and where money is flowing. And one of the easiest ways to do that is using our industry strength indicator. Now, if you don't have this, if you're watching us live on X or YouTube, do yourself a favor. Click the link in the description or just go to tradewithross.com. For $5, you can get signed up for an entire year of my Black Ops membership. You'll get unlimited access to this indicator you can put on your trading view. You'll get our live weekly sessions for an entire year, another members-only session with my analyst, John Fadday, in addition to bonus reports, my weekly newsletter, and a ton more. So it's $5, no strings. If you don't have $5, fine, but you're probably not trading stocks if that's the case. So what this does is show us which areas are leading the market. And all it does is take the leading sectors or 40 top sectors and shows us which one is going up the most over the last 1 and 2 and 3 and 6 month periods. And this is pretty self-explanatory, but it's going to tell you what's leading the market. Whatever the big guys are buying is going to be going up the most. And the picture here is pretty clear. It's for the most part all physical asset. Basically, it's energy and metals. Energy, natural gas, which is energy, solar energy, energy, the whole energy sector. And then metals, right? We've got mining and metals. We have steel, gold miners, rare earths, steel, mining and metals, rare earths, gold miners. Energy, we already talked about that. The basic materials. I guess we're seeing building products and home builders start to show strength. Somebody thinks we're getting rate cuts. So instead of trying to just look at every stock in the market, we're going to go, okay, where's the money flowing? Do we have a bull market? Yes. Which are the strongest groups right now? Well, metals, energy, anything in between. Good. What are the top stocks in that area? Give me the top 20 mining stocks, the top 20, 30 energy stocks, and let's just focus there. Let's fish from a stocked pond instead of trying to find the needle in a haystack that's some hospitality company or some medical technology breakthrough, the 1 in 1,000 that's going to win, versus in these groups, 90 out of 100 are going to win, okay? Why not consider the Russell? Yeah, we can look at the Russell as well. It's doing well. In addition, I mean, Russell is a small cap index. So these tend to be more domestic focused companies when there is a lot of geopolitical uncertainty, international uncertainty. So tariffs, for example, Russell tends to do well because the smaller companies tend to do most of their business domestically in the U.S. versus a Microsoft and a Google that are selling in India and Taiwan and South America and France and everything in between. So yes, that's an additional focus. It's a good point. Um, Good morning from the Dominican. Rick, good morning to you. Semiconductors showing signs of life in the last few days. Not all, but some. Yeah, I mean, you can just look at the index, right? So SOX is the semiconductor index, and it doesn't look bad, right? I mean, the semiconductors don't look terrible. You're right. It is coming back pretty well. But like Microsoft, they own a big chunk of OpenAI. Super Micro, which, yeah, that thing's still way off its lows. What are the other big AI plays? I mean, there's a handful of them we can look at here. But I'm just trying to make the point that it's much easier to focus on the leading areas right now and put money there and find the best stocks in that group because you're just stacking the odds in your favor. I mean, we have a bull market, so the odds are already in our favor. We take the top 2, 3, 4 groups, the odds are really in our favor. We take the top 10 or 20 stocks in those groups. Now we have a hell of a portfolio. And then we buy them at key breakout periods. We have the best chance of making big and fast gains. I want to show you exactly how to do that. So our go-to bread and butter setup is what I call a shallowing base pattern. I'm going to turn the moving averages off. We're just going to make this real easy. And let's look at it, for example, in gold. Okay. And this is going to work on any stock. It'll work any cryptocurrency, commodity, you name it. It's the same idea. And what we're going to see is a good run higher. Okay, so we need something showing strength. That's the leadership part. And we want to see this pattern where it just kind of shallows and consolidates as we move from left to right, tightens up, forms kind of a wedge pattern. When I say shallows, I mean like, look at the dips. Okay, so that was a 8% dip. That was a 5% dip. That was a 4% dip. Finally, only about 2%. So the drops are shallowing, right? The price action is getting tighter. And then our goal is to buy the breakout as it emerges right here, right there when the stock is exploding higher, or the commodity, or the crypto, like whatever it is. And this is basic supply and demand, right? So when large institutions are buying, people with big size, the price is going to go up, but they don't want to pay an infinite price. So they may manipulate the news cycle. They may put stories out why this stock or sector is in trouble. They may issue downgrades. You've also got people just wanting to take profits, right? You bought at 2, it's at 4, I'm going to sell some. And that profit taking has to get out of the way. That's the supply side of the equation. The demand is how many people want to buy. Supply is how many people are trying to sell. And you have to get that supply out of the way, or the stock simply cannot rally higher. And if the stock is being actively accumulated either by large institutional investors or just a massive wave of retail investors, any of those dips should be bought. And there's going to be a little more selling, and they drive it up. And a little more selling. And again, each one of these gets shallower because there's less and less people selling. There's less and less supply. You're working through it. If a stock's up 400% in a month, a lot of people want to take profits. A lot of people are scared it's going to shake them out, and that 400% gain is going to 200. The longer it sits here and goes sideways, people get bored and they get tired. They say, maybe I'm wrong, and they get out. And you have to get all those weak hands out of the way. But once you do, once that stock or commodity is then consolidated in the strong hands of institutions or long-term investors who have no plans of trading this in the short term, it is then easier for it to rally higher and do so quickly because that supply has been sucked up. The same amount of buyers are now chasing a smaller pool of shares. This makes sense to everybody? Really important to understand. And we think the market's huge. There's millions and millions of shares. There's infinite, but there's not. There's not infinite shares. And just take it elementary. Pretend there was 10 shares of GLD in total. 10 shares are trading back and forth. There's 20 guys in the exchange trading back and forth. And then somebody they're super bullish on it. So they buy one over here. They buy another in here, and another, and another, and another. So now this guy has 5 shares of GLD. right? Well, then the float, how many are now available to trade, is down to 5. If they keep buying and keep buying, maybe it gets down to 4 or 3 or 2. And if there's only 2 shares of something and 7 guys want to buy it, they have to compete and bid each other out. I'll pay $330, I'll pay $340, I'll pay $360. That's what allows it to run higher. And it's no more complicated than that. It's simply on a larger scale. It's not 10 shares, it's a million or 10 million, but there's not an infinite number. Will silver and gold go soft for Chinese New Year? No, that's nonsense. I don't think so. I wouldn't think that'd have a big impact. COMEX only has 107 million ounces, but 57 to 80 million ounce withdrawals. Yeah, I mean, without a doubt, there are definitely shortages at the exchanges. And I need to dig into that more deeply, but yeah, on these futures exchanges, primarily COMEX, where the silver and gold contracts trade, these futures contracts, typically no one takes delivery. Like, for example, I hold a futures contract. Hold on. I own one contract of the July copper futures, okay? Now, this contract represents 25,000 pounds of copper. So it's $6 a pound, 25,000 pounds. It's worth about $150,000. I got a $150,000 copper position, right? I have zero intention of taking possession of 25,000 pounds of copper. The way futures work is you're buying a future deliverable. I'm buying 25,000 pounds of copper to be delivered to me in July of 2026. And if I hold that contract through the third week in July, I'm going to get a call from the COMEX. Say, Ross, where do you want your copper? I'm going to say, I don't know. Put it in the driveway, I guess. But I'm not going to do that. No one does that. We sell before the delivery comes because most people trade futures for speculation or for hedging, not to actually get the stuff, right? And so it's the same thing is true for gold and for silver and for crude oil and feeder cattle and cotton and wheat and everything. But suddenly, with this massive demand in silver, people are going, no, yeah, I want it. The 5,000 ounces, yeah, here's the address. Send it here. I'll take that delivery. And so the COMEX go, okay. The problem is, and these are made up numbers, but they're trading like, call it, let's just pretend it's $500 billion worth of copper futures. And they only have, silver futures. And they only have like 500 million of actual silver. And it's just never been a problem. Nobody ever wanted delivery. That's fine. But now people are going, yeah, I'll take it. Yeah, send it to me. And so the exchanges have a shortage. And so they're having to buy physical silver, gold, these other precious metals to fill their vaults, to backstop these derivative contracts. And so it's creating additional demand. And, like the same thing with supply and demand, as even in retail investors like you and I don't care if you're buying 10 ounces or 10,000. As we buy physical gold and silver and store it or put it in a safe or under our mattress or whatever it may be, that removes supply from the market. And so that same amount of demand, the same consistent number of buying taking place, can drive these things much higher, much faster, because again, you're chasing a smaller amount of supply. Okay. Thoughts on copper and miners? Yeah, I still think they're great long term. Still super bullish on copper. I mean, I bought a contract like up here. I'm actually down a little bit. Let's see, I can log in and show you what I'm down. I bought it like right here. 2 days later, it soared. I was up like 15 grand. I was like, oh, this is smart. And then it came whipping down. So it's just part of it. I'm playing this for the long term. But hold on. Let me log in. You can see. I'm going to do this off screen so everybody doesn't see my username and password. In Interactive Brokers, by the way, if you want something that connects to TradingView and you can trade anything, stocks, options, futures, commodities, crypto, you name it, this is a really good one. This or TradeStation. So yeah, I'm down 1.6%, right? Which you're like, oh, 1%, that's nothing. Well, that's $2,500. I mean, I was down $7,000 uh, on Monday, but I mean, I'm not trying to day trade this, right? I'm looking at this going, okay, we know we have a supply shortage. We know demand is surging. I mean, just look at the trend here. I did get a bit hyperextended here. Okay, and that's fine. It may pull back in here, but I expect we'll see copper at 10, 15, $20 a pound within a couple of years. And that's why I'm holding this. And I'm not getting overly leveraged, but I'll add more along the way. Is a cup and handle forming in silver due to reported manipulation by Chinese in the silver market? You may be right, a manipulation thing. I wouldn't go too far down that rabbit hole. And I only say this because I've got a YouTube channel and I see 500 comments a day, and so many people get into, oh yeah, now they're tricking this, and now they're manipulating this, and now I'm like, who is they? If this whole the world's out to get me and it's all a scam, like it's even if that were true, which it's not going to help make you money. So I would strongly encourage you to try to wipe that thought out of your head. The sell-off that took place on Friday wasn't some grand conspiracy theory. It was a bunch of guys getting levered to the hilt on silver futures at 20-1 margin. And then they raised the margin, and they had to sell to cover their margin requirement. That triggered stop losses and more stops and more stops and more stops, and it just created this sell-off. That's what happens when a multi-trillion-dollar silver market goes from 50 to 120 in 45 days. It's not sustainable. You're going to get that correction. And all it really did was reset us to January 12th. Lottie freaking da. The only reason people feel either they bought up here, and which is unfortunate, or they felt that this was real, like, okay, now I've got X number of dollars in silver, when you never really did. It never should have been worth more than 50, 60, 70 bucks. This was just parabolic. So, I saw the same thing. I mean, my physical silver account went down 30 grand that day, but like it also went up 30 grand over here. And I was like, I'm not pretending that's real, right? I know it's just too much. Can you talk about the fact that the foreign markets are trading much higher than the U.S. market? I think you're talking about the physical market. I really think it's just a function of supply and demand, right? So if you look at, for example, and I'm just going to go to APMEX. I don't know. This is where I buy mine. I'm not shilling for them. I don't know anything about them or whether there's better, but I know this is one of the big ones. So if you let's look at some prices, okay? So gold right now, as we speak, is trading for $5,035 an ounce, okay? 50.35. So if I go buy gold, let's just say Eagles, okay? 1 ounce gold, American Eagles. They're trading, all right, 52.29 right here. You see that? So how much above spot is that? Well, 52.29. I'm going to do some quick calculator math. Minus 5,036 divided by the 5,036. So it's trading 3.8% above spot price, okay? And that's pretty normal, I think. It's actually above average, but you get the stuff out of the ground, you buy the gold. Well, you got to mint it. You got to ship it. You got to market it. Okay, so there's going to be some expenses. Now, what about silver? It's 79.5, right? So let's look at Silver Eagles. Silver, American Eagles. Again, just the same random year. Here we go. $94.65. So it's trading at 79. 94.65 minus 79.69 divided by that to figure out the premium. It's trading at 18.7% above spot. Now, heads up, when you go to sell it, they're going to pay you spot if you're lucky. So I bought, again, by sheer luck, right here. And it is now worth what I paid for it, right? So that spread, like why would silver be trading 18.5% above spot when gold's only at 3.5? Well, there's huge demand for it. So many everyday people, Americans, whatever, that are buying, want to store some physical stuff, go, man, that gold's expensive. It's $5,000 an ounce. I only want to put $300 in, or 200, or 1,000. Well, they buy silver. And there's so much demand for this stuff. These dealers are doing what any businessman would do. They're going to charge whatever the hell they can get away with. And they only have so much to sell. So they're going, all right, well, up the premium, up the premium. They'd charge 100% over spot if people would pay it. It's simply a function of record demand. And if you go back and look at this a year ago, 2 years ago, you wouldn't see anywhere near those kind of markups. So I think that's what's going on in the other countries. There's just huge demand for it right now, and that's why it's selling at a premium. Like, they can't buy it in the U.S. The link is just that. The link is just tradewithross.com, Alan. How will Basel requirements that bank hold 85% of liquidity against futures contracts impact? I don't know anything about that, Bill. 85% in liquidity against I don't know anything about that. What's going on with Bitcoin? Well, it's a turd right now. I put out a video 3 months ago calling the move to 60,000. That's exactly what we got. So, we had a failed breakout up here. And then remember that pattern I talked about, how we want to see it tightening and tightening and tightening, showing it's working through supply? Bitcoin was widening. It's expanding. So it's picking up supply. Comes down. Okay, let's tighten up. No, I don't think so. I mean, it's just selling. So this was the last place it kind of found support, down here on the 60,000, 65,000. Hopefully this holds. If it doesn't and it breaks, you're going to 30,000. But again, the same pattern I show you is what you want to look for to let you know the low is in. So it's the same thing on the lows as it is on the highs. As long as there's more supply than demand, it's going to go lower. So we need to absorb that supply. The dips need to get shallower. I need to see signs that there's fewer and fewer people, that we've worked through those sellers, that the buyers are coming in, driving the thing up, holding price tight. Then when it breaks out is where you want to buy. That's how you spot the turns. And just look here to April of last year. Albeit it's not a perfect pattern, but you can see that tightening, that consolidation here on the chart as we were doing big dip and then shallower, right? It absorbed that supply. Then it was free to run higher. Now, it is completely possible we just do this, but that's a lot rarer than when we see something like this. Okay? And my goal is to buy right there on the breakout. Stop loss right there. 5, 6, 7% risk, 50, 60, 70% upside. That's the game. Win big, lose small, repeat as necessary. So again, if you guys want to join us, we're doing these on YouTube right now. We may not be able to going forward. I got a strike on my personal channel doing these live. I don't know why. I feel like I'm giving pretty solid low-risk advice, but for whatever reason we did. So if that happens here, we will have to move them back to Zoom only. So if you're not a paid member, definitely go to tradewithross.com. It's just $5. It's an entire year, $5, live weekly mentoring sessions. You'll get access to this industry strength indicator you see here on my charts, as well as my weekly newsletter, some picks here and there, and tons of other stuff, okay? My search keeps going to traders. Yep. Again, tradewithross.com. I don't know how else to make it any clearer than that. Is there a scan for this pattern in TradingView or FinViz? Not that I know of. Nope, nothing to find block trades. It just does done in dark pools, John. And again, it doesn't really tell you anything because one half's buying, one half selling. So market's open in 2 minutes. Again, the big areas: energy, nat gas, consumer staples just coming up. That's just a gut reaction to the sell-off we saw over the last couple of weeks. Notice that's not anywhere else in the charts. That's just a gut safety play that the guys who don't know what they're doing do. I don't know, markets are scary. Let's go buy Johnson and Johnson and Post and like, okay, like that doesn't mean it. Don't ignore that. But the ones we've been seeing consistently are the energy, broad-based energy, solar energy, natural gas, as well as the miners and the gold miners, the rare earth miners, the steel, all that kind of stuff. So let's look through some of these, see what kind of names we can find. And the tough thing is some of these get extended. So if I look at the big energy sector, for example, Exxon is very much extended. Do I want to buy it here? No way in hell do I want to buy it here. But again, spot this 30 days ago and I was already the leading group. And you see that shallowing compression? See how it went from 125 to it fell down and then consolidated, tightened up. That's the moves we're looking for. Chevron, I'll be honest, I wouldn't have spotted this. It's just kind of wishy-washy and whippy. Conoco still has probably room to go, but it is a bit extended short term. EOG, Schlumberger, which we put out a trade on this one, has done very, very well. Marathon, pretty choppy. Phillips, again, not a perfect one, but you can kind of see some of those same characteristics, right? You can see how the dips were getting shallower. Get this one rip and then just ripped right back, right? That's a sign that the stock is being actively accumulated. Really good tennis ball action. Valero's up. Williams is up. Now, One Oak may be okay. This one's still a little earlier. I don't know much about this company. Oil and gas pipeline, okay. But you see a really clean consolidation here off the low. Breakout 2 weeks ago. Move up, retest, bouncing nicely. This is probably buyable here. These are typically not as fast to movers as some of the other areas. So the miners can move very fast. Medical, tech, retail, leisure can move very quickly. So these are actually pretty big moves. Like the Baker Hughes trade we called back in here a few weeks ago is up already pretty big. That's a 30% move in 50 days, though. Devon Energy. Again, don't get frustrated if I say these aren't buyable right now. The most important thing for you to learn is what you're looking for. And you want to burn this into your head. Say, okay, well, this is what I want to look out for. When I see energy leading or pharmaceutical leading or whatever, I want to come to these stocks, look for these kind of opportunities where it is breaking out for the first time. That's where the money is made. Once it clears the supply, once all the sellers are out of the way, that's where you get the big and fast moves out of these stocks. Terra looks kind of, see how choppy a lot of these are? Like a lot of these just don't look very tradable. APA looks pretty good. See how it's kind of tightening up? It's shallowing a bit here. APA looks pretty good. Oil and gas, US, Egypt, UK, headquartered in Texas. Shocker, everything is. Okay, yep. Other sectors, natural gas, midstream player, Conoco extended, EOG we looked at, Occidental. Yeah, pretty whippy. That one we just looked at. Terra. Is that APA? I think APA looks really good. You could probably buy it in here. Don't need to risk a lot. Maybe 8%. Stop at 25 half. I think APA is probably buyable here. This, again, just choppy. And there's nothing wrong with 9 out of 10 stocks you look at going, I don't see anything. It's fine. There's 5,000 of them. You're not supposed to be able to predict every single stock. You're supposed to just look for the best opportunities. See this one? Like, what do you see? It's just all over the place. It's up big, down big, up big, down big. It's there's nothing really there. SM Energy may be worth a shot. It had its big sell-off, kind of consolidated, formed a rounded bottom over the last 3 months, trying to break out to the highs. Okay, I give that a stab. This one, very extended. From 21 to 27 in 3 weeks, it's due a pullback, just like silver was. What about the mining names? CRS, we've been talking about this one a few weeks. It's so far performing very well, but it's pricey. Freeport's the big copper miner. Now, it's probably going to consolidate here for a few weeks, but when it gets ready, I'd be all over this. Had its big run. What do you want to see? We want to see it do like it's doing, consolidate, absorb, shake the supply out, consolidate with the strong hands, then we buy the stock. Okay, so this is one I'm absolutely watching. It'll probably set up a buy in the next 2 to 8 weeks. Alcoa, pulling back here. Newmont, probably good on a pullback here. Almost touched the 50. Yeah, Newmont's a big leading gold miner. Any touch to the 21 or 50 is probably buyable, so I think it'd be a good place to buy a pullback in Newmont. MP, it's a rare earth stock, the one the government took a equity stake in. But do we see anything worth buying? I mean, not really. Lower lows, lower highs, lower lows, lower highs. You know, this looked good. It was tightening, it was consolidating, it was getting ready. It had a quick explosion, and then something happened, and it just rolled over. So until this thing firms up, I like the stock. I like the area. I just don't like the chart setup. Royal Gold, probably good to buy on a pullback in here. Didn't get much of a shallowing consolidation, but you got 1, 2, 3, 4, 5, 6, 7, currently 8 trading days, a week and a half, holding right here between the 50 and 21-day moving averages. Gold very strong, pushing higher. These are the money trades right in here, where you get this kind of shallowing, tightening action over a month or two and buy the breakout. This is what we want to be around for. Not this, not this, this, right? We only want to be here for the good times. All right, you guys are firing an awful lot of stocks. Let me take a look at them. USAR. We had some insider buying in this one. I was really hopeful. It hadn't bounced here. I like the story. I like the stock. They're still pre-revenue, pre-profit. They're a rare earth stock. I think Trump, via the government, took a 10% equity stake. But, you know, you got a $4.6 billion company with $0 in sales. So it's purely speculative. And if it's purely speculative, I need an absolute, rock solid technical setup. I need clear signs of big accumulation. We've absorbed supply. I need to see tightening price action. I need to see volatility compressing. I need to see resistance. I need to clear define buy point and stop loss. That's what a good setup looks like. This, I mean, maybe you could say, okay, well, it's retesting, support resistance level here at 19 or 20, but it's a bit of a stretch. I mean, if you go into my head, buy or sell, buy. Right? But if I bought it and want to use any kind of risk management, I need to risk about 20%. What I think would be safe. DRTS. What is this? Oh, yeah. Yes, this is a stock we saw insider buying in, right? Wasn't this? Let me see. No, what did I put this one out for? Oh, one of our fire trades, I think. Okay, that's what this was. Yeah, I mean, look, great price action. Big explosion, consolidation, big explosion, kind of tightening up, shallowing out here. So, yeah, very, very strong. Now, it's a small cap stock. It's in the medical sector, which is not an area I'm watching. It's riskier on pretty much every level, but it's a very, very high momentum stock. It's got a relative strength rating of 99 out of 100. It's as good as it gets. So if it breaks out again, sure, I'd play it. Is leveraged silver viable right now, like AGQ? The ProShares Ultra. Oh, man, that's painful, huh? Yeah, leverage cuts both ways. That is a 70% drop. Woo, mercy. I don't much like the leverage plays. I mean, the way silver's trading, you don't really need the leverage right now. The tough thing on these are really good for like day trades, maybe swing trades of a couple of weeks. But because of the way these things are structured, you're never going to do true 2-to-1 on the metal. Because how do you get 2-to-1 leverage? Well, they do futures contracts or they do options, they borrow money, all things that have expenses. So let's say you held AGQ for 6 months and silver went up during that time 50%. This is not going to be up 100. It's going to be up 70 or 80%. And if you overlay this, for example, with just like SLV, which is the non-leveraged ETF, take it from a point here, for example. So see how they're just not like they're exaggerated in both directions. So this drop here was about 37%. This was over 70, which is more than double. Same time, this move up was 125. This was 400 for some reason. So it just, this is actually a very odd one, to tell you the truth. But I know with doing the oil and the gold and some of the others, the way they structure these leveraged instruments makes it where they only really make sense for short-term trades. Because it's not going to be that big of a difference over a week or two, but it is going to be a big difference over a few months. 3% ADR in these energy stocks doesn't bother you. In what way would that bother me, Rocket Boy? Like too low, you mean, or too high? Yeah, I like Solar Edge too. I mean, it's not perfect, but you can see here a pretty significant area. Let me turn this moving average off. Pretty significant area right in here about the $35, $36 area, which was, resistance, resistance, support, support, little uncle point, but support, support. Then it was resistance and resistance and resistance. So if we get through this kind of $35, $36 area in here, if it can blast through, that's probably a good little buy trigger. But I like Solar Edge. It's in the right space. It's in an uptrend. It did pull back into the moving averages, but is now kind of consolidating and tightening up. So, yeah, I think it looks really good. Market's quite unstable. What makes you say it's unstable, Ben? Do you think the market will turn around to a bear market anytime soon? I do not. How to bought all 3 in long-term options. Are you doing good with those then, Jack, huh? Yeah, good. The Venezuela trade. Exxon's notorious for splitting stocks and they go high. What effect does that have on stock value? Absolutely zero effect on stock value. So people think stock splits are great. They don't do anything. It just sounds cool. All that happens is, let's say the stock is, $500 per share, and they do a 5-to-1 split, 5-for-1 split. All that happens is, if you owned one at 500, you wake up the next day and you have 5 shares worth $100 each. So whether you have 1 share worth 500 or 5 shares worth 100 doesn't change anything. You have the same amount of value in a stock. Company valuation doesn't change. Nothing's changed except the share price. And they do this to make it more tradable, I guess. The idea, like if they have Berkshire Hathaway, for example, Warren Buffett's firm, his A shares have never split. Ever. Ever, ever, ever. And so, back here, it was a $300 stock. Now it's a $755,000 per share stock. That's what happens if you never split. But they introduced B shares, which do split. So that's the reason shares either they split to make it more tradable or reverse split to get the price up so their stock doesn't look so sketchy. Their stock's worth 30 cents a share. They do a 10-for-1 or 100-for-1 reverse split and try to make themselves look more reputable. This Palantir hit bottom. I mean, it doesn't look like it. This is very much like chasing last year's winners. I just think the AI trade is super long in the tooth. This happens every single bull cycle. It happened to .com. It happened in 2020. It happened in 2010 and 11. It happened in the 80s. It happened in the 1800s. It's a very simple process it goes through. And by the way, again, that link, tradewithross.com, go to there, get signed up. It's $5 for the whole year. You'll join us for these sessions for an entire year. We do another one, members only over Zoom on Thursdays, indicators, newsletter, the whole bit. Here's what happens. A new technology or company or fad or whatever comes out. Their earnings are 20, 30%, 40%. Mark goes, they're doing great. They're doing great. And they go, they're going to go to infinity. This time is different. Nothing can stop it. And the stock does this. Okay? And this was the AI boom over the last 4 years. It was the .com bubble. It was the work from home stocks. It's all the same thing. And then the earnings report comes out and they only grew 20% instead of 25. Or the plans aren't coming as quickly as possible or whatever. And it starts to get a little bit of uncertainty. And then it does this. And it comes all the way down. And then it goes back into a base. And then the true run begins. This is the 4th stage of the stock cycle. It repeats over and over and over again. And it has since the beginning of time. It will continue to play out that way long after I'm dead. And I've got one marked up here I can show you. This is a weekly chart of Roku, for example. And I've laid out the 4 stages of the stock cycle. And I would encourage you to learn this, to memorize this, because it's going to keep happening over and over and over again. Now, the extreme version of that is when you get a bubble, when you get a this time is different, when you get a AI or an internet birth or something. Like, yes, AI is going to change the world. Absolutely. It ain't going to happen next week. NVIDIA is not going to be perfect. OpenAI will probably go bankrupt, if I'm being honest. They have $13 billion in revenue and $1.5 trillion in spending contract promises. Like, it just doesn't add up. It's not worth $500 billion. It doesn't make any money. It won't make money for a decade. So these things get inflated. Everybody gets excited. They're a bunch of kids in a candy store and don't want to miss out. And this happens to millionaires and billionaires too. And then eventually reality comes. It goes to stage 4, comes down, and it goes back into a stage 1 base. And that's when the real growth starts. And look at the .com bubble. Go look at Microsoft. Go look at Intel. Go look at what those, same thing, up 1,000, 2,000%, crashing down. And then, now Microsoft and Intel are worth massive amounts of money. But the time to buy was not 1998, 99. It was 01 and 02. Pan American Silver, EM Gold. Let's take a look at some of these. I think Pan American Silver is a buy here. These stock, the miners can be tough to time because you can find a perfect pattern or perfect setup in the miner, and then if the metal crashes, it crashes. Like what happened to silver the other week, hammered every miner. They didn't know margin requirements are going up and the thing is going to get hammered like this. They didn't know, but when the price of silver goes from 120 to 75 in a day, every miner gets hammered, okay? So that's just a risk you have to take. Having said that, I think it looks good. It's pulled right back here into the last consolidation zone. It's bouncing off the 50-day moving average. I'd put a stop loss at 52 and ride this thing higher. EM Gold, IAG, looks great. Nice clean trend. One bounce off the 50, holding the 20-day moving average, riding higher. Sure, nothing wrong with that. They're reporting earnings in a couple of weeks, but we all know what they're going to be. They're going to be fantastic. Gold's at record highs. FSM, Fortuna Mining. I haven't studied this one as much, but looks really good. Just like all the others. Big drop down a 30th. Consolidating, tightening up, resuming their uptrend. Looks really strong. Really, really strong. Insider buy, ZBio breakout trade this morning. What breakout trade this morning? I don't know. I don't see a breakout. Maybe I'm missing something. I mean, yeah, ZBio did see insider buying back in January. I mean, we bought it at 20 and a quarter. We're doing it's up fine now. I can't predict what's going to happen in the next 6 hours, but hopefully, I mean, it looks good, right? It's had its correction. It's kind of tightened and sort of absorbed here. So ideally, is what we want to see next. SVM mining. You know, you can pick these miners, and some of you are going to do very well. Some of you are really good at this, which I'm not in terms of the miners. I'm not going to dig through and learn their all-in sustaining costs and keep up to date on all their mines and study their executives. And like, I'm just not going to do it. I don't have enough time. But 90% of these miners are going to lose lock, stock, and barrel together. 90% of the silver miners are going to move all the same. 90% of the gold miners can move all the same. You know, if you want to buy all the silver miners, just buy SIL, the Global X Silver Miners. If you want to buy all the gold miners, buy GDX, the VanEck Gold Miners ETF. It will greatly reduce your single stock risk while still giving you that leveraged upside for the mining stocks. And maybe you hit it big, but it's like going to have to be a big discovery in order for one mining stock to vastly outperform the other. So, my opinion, picking individual miners is a lot more risk for very little more upside. HYMC, Highcroft Mining. Yeah, I mean, what a monster this has been. I have to look into the story here to see what's going on that drove this thing up 400% in a month. But yeah, it looks good. Now, this is one, so you didn't get a big consolidation, but like you're not going to when a stock is up 100% in the last freaking week, right? So big move, and then you got this little kind of shallowing. It wasn't much, but you got 2 weeks fit, which is a long time for a stock moving like this, and you buy that breakout. That's the move you want. I mean, you doubled your money in 2 weeks, right? Yeah, huge move here. I'd have to look into it more to see what's going on. Hopefully, it holds kind of in here. You've got the past breakout area. You have this 1 week consolidation. It took place last January. It makes a lot of sense for this is where it goes. So if I were going to buy HYMC, who asked that? Brent, this would probably be about where I want to do it. Now, remember, I try to keep risk very tight. I try to risk 7, 8, 10%. Sometimes it costs me, but I try to keep it very small. When you're looking at a stock that ran 429% in the last 48 days, it's going to be real freaking tough to risk 7 or 8%. So if I were buying this, I would only buy as much as I could where I could risk, call it at least 15%. I want to get my stop down here to $30 a share at a minimum, ideally down here to 25 to really give it some room. But I think 15% you get away with. If you buy it here, stop at 30. That's about as tight as I would probably do it. And in fact, if you want to do some, we'll go ahead and put some on now. Just to keep track of this, okay? I'm not going to buy a lot. I'll just buy 100 shares or something. But here's what I would do. See, look at the spread. The sell price is $34.90. The ask is $35.19. So I want to do a limit. Don't take a 30 cent haircut out of nowhere. So I usually try to split the difference in $35.05. Going to buy 100 shares. If filled, I'm going to set a stop loss at $30. Maybe I'll do $29.95 just because I'm weird. Make that good till canceled. Now, again, I'm just buying 100 shares. Okay, it's a $3,500 trade. It's not a lot. We're just going to put this on to keep track of this. We can check on it next week. All right, limit order executed at 35.03. So see how splitting the difference helped us out there? If I'd have just hit buy market, I'd have been filled at 35.17. So it's not a lot. It's what, 15 cents cheaper, but that's, a percent. No, what is that? 0.5%. I guess it's not that big of a deal, but still. All right. We'll keep track of this thing, check on it next week. I think it's worth a shot, right? A 15% risk. Because if we're right and it bounces here, we should be back into the high. It should be 50 or 60%. So, we're looking at 3 to 4 times our risk on the upside, potentially more. I would have loved to buy here at 30, but, just look at a 5 minute. Like it came down. I'll get this extended trading hours crap off. You know, it gapped down initially, tried to find some consolidation, dipped, and then has rallied here ever since. So it doesn't look like it's going to come back. It might, but if it's going to run back higher, this is what it would look like. Hecla Mining gapped up some. HL, yeah, still long. Hecla up 5%. I bought this little dip in here. Very similar to the trade we just took on HYMC. Almost identical, in fact. See the last consolidation? Bought it here off that support. It bounced. You know, got it when it was running. So we'll see how this one does. What does it tell you if there's a huge gap between bid and ask? Just that it's thinly traded, John. Yep. So like Hecla, say it's a 1 cent wide, 23.54 by, look, 53 by 54. It's a penny wide. This stock trades, look at the dollar volume down to that white box at the bottom of my chart. It trades $720 million worth of stock every day. It's very liquid. Hycroft actually is higher than I thought, 200 million. I'm surprised the spread's that wide. There's not a lot of trading going on with it. EXK. Endeavor Silver. Yeah, looks good. I mean, most of these charts look exactly the same. Most of these miners are going to look almost identical. But two things I want you to see here, and they're the two best buy points on this chart. One was the initial breakout right over here. Beautiful buy point. Yes, it got whacked. No, we could not have seen that coming. Yes, I'd still be very happy to be up 50% in 2 weeks, okay? Secondly, retest. It falls from 15 to 10.5. It is not a coincidence that it stopped right there. Right there at the breakout level. That is not a coincidence. If you get a breakout stock and you miss it, the second best place, this is the first best place to buy. This is the second. Right there. On the retest. Because if it runs and pulls back, the retest, if it's going to bounce, is where it's going to bounce. 95% of the time. So if you miss one, don't go, I got to chase it. Oh, no, it's going. He was right. I got to buy some here. Don't do that. If it just keeps running, just miss it. It's fine. There'll be 1,000 other opportunities in your lifetime. Don't worry about the one you miss. But if you get a second chance, take it. You wanted it here. It ran too far. It comes back. It's giving you what you asked for. Take it. Don't be scared of it. It won't bite. Buy to the breakout level. If you did that, I mean, it didn't go a penny against you. Just perfect to that T. But you could have risked 7 or 8% on this thing and been plenty fine. The top lithium, I don't know the top lithium stocks. Off the top of my head, I don't know. NOK, is that Nokia? Looks beautiful. Yeah, this looks great. I mean, huge run from 4 to 8. That's got to be absorbed. So you want to see some shallowing in here. It's coming in. Got what I call this a shakeout move, where it comes down because everybody's stop losses are right here. Shakeout and boom, right back to the top. Really, really strong action. This looks phenomenal. Really, really good. I don't trade a lot of Japanese brick phone makers, but this is the same Nokia, right? That made the cell phone you could crack somebody's skull with. We all used to use. 38 billion, it's got to be. I know that's not their main product anymore. Just what I remember them buying. Yeah, wonderful. Whoever picked this, Bob, great stuff, man. Looks really good. ATXI. AXTI. Sorry. I don't know what's going on. A little small cap stock heading to the moon. I mean, wonderful. Wish I owned it. Not a chance in hell I'd buy it here. Now, when I say that, it does not mean this stock's going lower. In fact, it looks like it's going higher. But to buy it here, where's my stop loss? What price am I wrong and I'm going to get out? And if you tell me it needs to be down here, beneath the last little, well, okay, then that means I got to risk 43%. I'm not doing that. Best case, I'd put it at the low of the day. And to do that, I need to risk 13.5%. So it's just extended, right? I mean, you could make a case for, okay, I want to buy over in here. Whoops. Out of this little consolidation zone. Okay. Out of this little consolidation zone. Okay. On the retest right here. Okay. This is would not be my favorite spot to buy. It looks fantastic. It just wouldn't be on play. Now, if you own it, hold on. It looks great, but it is absolutely very extended, right? And that's what happened with silver. It's like, okay, cool, it's going on, and then it went whoop. That's extended. That's when you get the big corrections. ATCX. I mean, the price action looks terrible. It's a micro cap stock at $30 million. So no institutions are trading this. It's consistently making lower lows, despite the fact you get this huge uptick in volume, which I'm guessing is from the split here. I bet this is a reverse split, wasn't it? Yeah, 1 for 12. So their price was so cheap, they had to do a reverse split to try to drive the price up. So really, it's like a 50-cent stock. I mean, I think the chart looks truly hideous. It's about as bad as it gets. Below every moving average, they're all trending lower. It's at 52-week lows. Like it looks truly terrible. I would have to really know something about the fundamentals of this stock to buy it. It'd have to be a totally fundamental buy. It just wouldn't be a technical buy, which is fine, but no technical signals. Waterbridge, yeah, recent IPO. I still think looks good. I think we own this in Insider off these lows here, but looks good. Plug volume is insane. What's insane about the plug volume? I don't understand. A stock plug? Doesn't look very insane to me. I don't know. If SLV breaks the call wall, okay. I'm going to ask again. ABBNY. Sorry, Jack. I'm not ignoring y'all's. I just don't see a lot of them. Man, it's a monster. What is it? What are they doing? Electronic products. 150 billion. They're large cap stock. Electrification, motion, automation solutions. I have to dig into this. Headquartered in Switzerland. Oh, okay. I mean, yeah, it looks phenomenal. I hate I missed this one. I mean, look at the resistance in here. Just 2 years of the stuff. It couldn't get above $60 a share. It finally does, and just off to the races. You had one other little consolidatory period in here where the stock kind of came in and shallowed and really wedged up nicely, right? Just kind of formed this little wedging pattern. In price action, tightening. It's like a coil spring. It's just pressing in ready to release that energy higher. But yeah, I mean, it looks great. Like, I don't know where to buy it now. I mean, if I bought it here, stop at the lows, risk 4 or 5%, sure. I don't know much about it, but I mean, it looks phenomenal. Somebody's buying it, and they're buying it in big size. What is Fly doing? Now, y'all know that when I do the 2 trades on Tuesday, these are not stocks I'm getting married to and going to hold for 6 months, right? I keep seeing comments of a stock I did like 3 months ago that stopped us out. Like, are we still holding Fly? I'm like, no. That's why I get the stop losses. So, I mean, I'm not attached to any of these stocks. I'll buy them. I'll risk 7 or 8% trying to catch a breakout. If it hits me, I forget about the thing instantly. I mean, that silver shock, it stopped me at 2 or 3 of them. It's part of the game. Others have gone 30, 40, 50%. It's fine. Like I think it's trying to form a stage 1 base, and I thought it was going to coming off of that down in here. It may not quite be ready. I like this long term. It wouldn't be like my favorite stock. I'm going to hold it no matter what and listen to all the earnings calls. Like, I don't care about it that much. But if it did something like this, yeah, I mean, I absolutely, it's probably what it's going to do. But my goal is to buy here, go from 35 to 55 in a month and a half, and get out and forget about the stock. I'm just not building long-term positions on these things because I believe in the companies. I don't think you can do that anymore because the fundamentals are so crazy. Is Microsoft falling on hard times? Are they losing money? No, they're printing billions every month, and the stock's falling off a cliff. Why? Because the valuations imply future levels of growth and earnings they're no longer hitting. Like, these are things you just can't predict or forecast or even model. Like, Buffett made a bunch of money in the 60s and 70s and 80s. He'd never even beat the market the last 15 years. Because what he does doesn't perform like it used to. You can't just look at a sheet and go, okay, they made $3 a share last year, then $4, then $5. Okay, I'll buy it when a P's under 8. Like, it's just not that simple anymore. He's buying Wrigley gum and Visa and Coca-Cola like See's candy. We're trying to buy tech companies fighting on 8 different fronts. With retail, with commercial projects, with massive multi-$100 billion data center build-outs and complex models and equity in private companies. And then they got space program. Like, it's just not possible. It's not possible to realistically value fundamentally a stock like Microsoft. It is 0% impossible. So all I have is price action. All I have is, are the big guys buying or are they selling? Is it trending up? Is it trending down? Are there periods where supply and demand dynamics are working in my favor and I have a realistically shot of making a pretty big and fast gain with little bit of risk? So, the only things I'm taking long-term positions in because of a strong belief in it is physical gold and silver. That's it. Energy, maybe. Like, I'm not betting on a $3 trillion company. This is 50 companies in one. ONDS looks fine. Dip through the 50, which I don't love, but if it's going to bounce, it should do so in here. Just look for the last supply zone. Comes in here, find some buyers. It needs to get legs. Don't let it get under $8 a share. If it does, it's toast. BORR, time to sell or hang on? Where'd you buy it? I mean, it looks great. I would usually tell you the same thing I tell everybody who asks that question: sell half. You're up 20, 30, 200%, whatever it is. Don't know if it's going to keep going higher, sell half. If it keeps going higher, you'll be glad you only sold half. If it rolls over, you'll be damn glad you sold half. That's what I do. I sell a third, sell half. Anybody who tells you they can name the tippy top of a stock is lying to you. I can tell you some signs that say the move could be over. This one, by the way, exhibiting none of them. But you never know where the top is. So get good profits in a short amount of time, take them. If it doubles again, who gives a damn? You make 30, 40% in a month, nothing wrong with that. Take it all day long. Still holding KGC, got it at $16 a share. Beautiful. Should bounce here off the 50. If it doesn't, get out. Very similar to we saw in many of the others. There's a big consolidation period, tightened up, come in, right, breakout. Didn't quite get down to that initial breakout area, but like right in here would be where I'd be trying to buy. Perfect breakout over in here in Kinross. We bought this thing back in 2024. I think we bought it here, coming through this little, you can't even really see it, little wedge in April. And you could have added on here, and you could have added on here, and you could have added on here, all from the same pattern. Going, okay, what's leading the market? Gold, 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 gold. Good. What are the top gold stocks? Kinross is going to come up on every freaking search you do. What is the breakout pattern? Okay, buy it there, buy it there, buy it there. You had 4 chances to buy this stock. You could have been adding on it each time, but up 300% right now. Don't overcomplicate it, okay? If you don't understand the stock, the company, the chart, move on to the next one. Just look for the stuff that's really obvious. Okay? Do you have a sell stop in your copper futures contract? I do not, because I got enough cash in there to cover the whole thing and not need the margin. So my goal in the copper is to let the thing run, get some, once I get a decent size profit on the thing, whether it's a few weeks or a few months from now, add on more contracts, and try to slowly build a sizable position in copper. Okay. All right, guys, we are at the time here, about 10 minutes overtime, so we'll go ahead and end the session here. If you haven't already, go to tradewithross.com to get signed up. We do this every Monday for an hour for an entire year. The Thursday session is members only over Zoom with our analyst, John Fade. You'll also get access to our industry strength indicator, our team, support staff, bonus reports, my monthly news or weekly newsletter, and a ton more stuff. So go to tradewithross.com to get signed up. And I will see you all here next week at the same bat time.